Hello dear students. Now let us understand about journal entry. So in accounting, the first process, okay, in the preparation of final accounts, the first initial process that we need to do is this journal entry. That is recording all the transactions in the journal book. Let us understand about this. So what is this journal entry? It is the process of recording business transactions in your financial books. Whatever transactions, purchase, sales, okay, rent, which is what rent received or rent paid, whatever, okay, salaries, wages, everything has to be recorded in the financial book, and that is what in the form of journal. Okay, so actually it works on double entry basis. So double entry bookkeeping system, that is for every transaction it has dual aspects, that is debit, another one is credit. Okay, that is why it is given as minimum of 2 entries for each transactions. For every transaction there will be 2 entries. Okay, and next is, so this, as any financial transaction, can bring significant changes with the business. So based on the work of the bookkeeper, that is the record keeper of an accountant, that how he is making entries inside a journal book, based on that, either it may be purchase or sales or any kind of financial activities. Okay, so journal entries should be in detail and clear cut form. And next is, what is included in journal entry? What should be included? So first it starts with reference number. So that is to be indexed as well as retrieve the entry whenever required. Whenever we need to see the particular transaction, using this index number we can identify. And next is a header, where it denotes the date of the transaction, which date the transaction was happened. And next, the particulars column, accounts column, and it also includes account names. Okay, and based on the double entry system, 2 columns, one is debit, another one is credit. Okay, so debit column, actually it shows that the account from which money has been paid, and credit column and the to which the money has been paid. Okay, and this is what the basic things to be included in the journal book. And rules, so first is personal account, second real, and third one is nominal. So under personal account, rule is debit the receiver, credit the giver. So debit the receiver, credit the giver. See here, all the individuals, it speaks about a person, any individual person, bank, or any institution. Okay, so example is what given here as debtors or creditors, whoever. Okay, so next is real account. So real account rule is debit what comes in and credit what goes out. So here certain examples like cash, bank balance, purchase, sales, plant and machinery, whatever. Okay, so what comes in and what goes out. So based on the transaction, so we should identify that yes, debit what comes in, this is what coming in, and this is what going out. And next is nominal. So nominal, see, real actually it speaks about assets, right? And here for nominal, it speaks about all the losses and expenses to be debited, and all the incomes and gains to be credited. So whatever expenses that you find in the transactions or loss that you find in the transaction, that part should be debited. If at all, if there is any income, salaries, what you are receiving, or wages, what you are getting, if you find any incomes or gains, that should be credited. Okay, so example is, we can say interest received, dividend received, you are getting, right? And next, how to prepare a journal entry. So first part is, we should recognize the accounts involved. So what kind of account, whether that falls under personal or real or nominal, we should identify that. And second is, determine the type of accounts. And next, implement the relevant accounting rule. So based on the rule, so which rule that we are going to follow. So if at all personal means, we should follow the personal account rules, that is debit the receiver, credit the giver. If it falls under nominal, we should follow that rule. Okay, so based on that we have to prepare this journal entry. Thank you.